This week on the Crypto Nightly News, 1 week after the great crash, there is detectable life on planet crypto. The U.S. eyes a little dance with Lady Crypto herself, and we look at how crypto is bringing new financial options to the Caribbean and South America. We'll have those stories and commentary from that sailing guy this week on the premiere episode of the Crypto Nightly News. We all know that crypto was the term future of the digital asset compared to last year's term. Welcome to the Crypto Nightly News with Chris Jerman. Crypto Nighters, welcome to the Crypto Nightly News for the night of June 27th, 2022. This is the premiere of a brand new show we are rolling out on YouTube and all of your favorite podcasting networks. We will be publishing new episodes weekly at 9 p.m. on Mondays until we can fully develop a news gathering team and a few sponsors. Right now, it's just me writing, reporting, and recording from my tiny little trailer studio located in an undisclosed location way out in the Utah desert. In this show, we will cover all of the news of crypto, metaverse, and all the other new technologies rocking the free world, and we'll break it down so that it's not all that crypto jargon and speak. You'll also notice I'm reading a little bit slower than I normally talk. That is because many of our listeners will benefit from a non-East Coast pace to understand some of the more confusing and technical stories I report on. If you want it faster, you can speed up your player to a pace that fits your busy schedule. And just to keep it on the up and up, I am not a financial advisor. I didn't even sleep at a Holiday Inn Express last night. I am just a simple sailor who knows a thing or two about this blood sport we call crypto. If you want real financial advice, and I highly recommend you get real financial advice, if you have money to invest, find a real financial advisor. This show is for educational and informational purposes only. And if I can put a smile on your face while I'm doing so, so much the better. So now, this is your captain speaking.
You ever seen a grown man naked?
Please buckle your seatbelts, put your tray tables in the fully upright position, and raise your seat backs because we're heading into Cryptoverse, and we could experience a little bit of turbulence. Welcome to the Crypto Nightly News with me, your host, Chris Jerman. Our top story lands us right here in the good old US of A. Crypto recovered a bit this past week following a brutal crash the week before that shaved off more than 30% of value from the two biggest cryptocurrency leaders, Bitcoin and Ethereum. They dropped the levels not seen since 2020. For the week that was, Bitcoin gained more than 10% over the last 7 days, working its way back up past 20,000, and Ethereum clawed its way 19% higher, up to nearly 1,200 on the week. Lots of cryptocurrencies saw gains in triple digits over the 7 days, but we will focus on the top 30 in this podcast going forward. In fact, most of the top 30 managed to recover by double-digit percentages by the weekend, except Cardano, which teetered its way to a very modest plus as of Sunday, but was back down in negative territory this morning. It was a quiet week for news on the news front, except for that hand grenade lobbed over the fence line by the Supreme Court on Friday. But that had minimal effects on the financial markets, including the cryptoverse. On Tuesday, the Bank for International Settlements, the BIS, a global organization of 63 leading central banks, published its annual economic report for 2022. The report cited two main flaws in crypto: the need for nominal anchors and fragmentation. Now, a nominal anchor, according to the Oxford Dictionary, is a mechanism for determining the general price level of a currency in an economy. Monetary authorities can simply proclaim an intention to keep some price index stable, but this doesn't have a lot of credibility, does it? A nominal anchor is a way that promises credibility for a currency. In the case of stablecoins, they peg their value to fiat currencies like the US dollar, with varying degrees of success. BIS says that the existence of stablecoins indicates the pervasive need in the crypto sector to piggyback on the credibility provided by the central bank. The report argues that cryptocurrencies have yet to really challenge the dominance of the central bank, saying the fact that stablecoins must import the credibility of the central bank money is highly revealing of crypto's structural shortcomings. That stablecoins are often less stable than their issuers claim shows, as was demonstrated by the Terra meltdown in May, that they are at best an imperfect substitute for sound sovereign currency. Now, onto the term fragmentation. That refers to the abundance of various cryptocurrencies competing for supremacy. The BIS thinks that it is perhaps crypto's greatest flaw as the basis for a monetary system. But the BIS report wasn't all down on crypto, citing blockchain technology for central bank digital currencies. These are essentially US-issued stablecoins pegged to domestic currencies by the US central bank. It also pointed to smart contract technology, self-executing financial contracts on blockchains, as one of the biggest advantages that will enable transactions between financial intermediaries that go beyond the traditional medium of the central bank reserves. That's in quotes. Both the US and EU central bank heads, Jerome Powell and Christine Lagarde, separately argued for regulation of cryptocurrencies this week. They say the speed at which the blockchain is growing is leading to potential economic risks, though both agree that crypto doesn't pose any immediate threat. On Wednesday, Congressman Jim Himes, a Democrat from my home state of Connecticut, released a proposed outline of how the country could implement a CBDC, claiming it could help safeguard the dollar's role as the world's leading reserve currency, saying, the longer the United States government waits to embrace this innovation, the further we fall behind both foreign governments and the private sector, quotes unquote. He says it is time for Congress to consider to move forward with legislation that would authorize a U.S. CBDC. And on Thursday, Jerome Powell told the House Committee on Financial Services that Congress will eventually receive guidance from the Fed on how it could implement a CBDC. So, it sounds like the U.S. is itching to dive into crypto. Where are you on the whole crypto craze? Let me know. Shoot me an email at info@thechartedlife.net or message me at thatsailingguy on Facebook, Twitter, or LinkedIn. When we come back, we'll be heading south to where the weather suits my clothes, and when it's time for siesta, you can watch them walk by. You're watching the Crypto Nightly News. I'm Chris German, your host.
Everybody's talking.
Welcome to the Nightly News with Chris German. I'm your host, Chris German. This is a new effort to inform and educate an American audience about the dynamic world of cryptocurrency, Web3, metaverse, and NFTs. Americans as a whole are quite shy about the crypto market. As Bloomberg reported earlier this year, more than 1 in 10 American adults have never heard of cryptocurrencies such as Bitcoin, Ethereum, or Dogecoin, according to a survey by the Harris Poll. This means that a massive swath of middle America who tuned into the Super Bowl last winter had no idea what they were watching when crypto businesses spent an average of $2.2 million per spot on advertising. Crypto has taken its place in the world financial picture, but it's talking to a financially illiterate client base in the American economy. What is needed is not more crypto speak and jargon-laden infomercials for 24-year-old crypto bros to reach this unmet American audience. Rather, what is needed is a trusted voice who may teach, inform, and entertain this sector of the economy so that it might benefit from these new technologies. In short, America needs the Crypto Nightly News with Chris Germany. In this weekly, hopefully soon to be daily podcast, we'll reach out to an American audience with a warm and friendly voice that comes from experienced and trusted journalists adept at translating crypto speak into conversational American English. We'll use the energy of the sportscasters of SportsCenter and the wisdoms of the financial reporters of the world to create weekly newscasts complete with humor, analysis, and to deliver the top headlines and informational news stories that you as Americans would love to hear and learn from. This is done with an eye to creating sophisticated financial consumers who have the confidence to dive into this blood sport we call crypto. We market the show across the entire array of social media with our partner podcasting firm, and we will reach thousands, if not tens of thousands, very shortly. If you would like to join in this effort as a guest or as a sponsor, please tune into our podcast weekly on Mondays, 9 p.m. Eastern Time, or call 252-617-3792 to discuss how we can welcome you to this effort. Our email is info@thechartedlife.net if you want to email us. And thank you for watching this video. Crypto is catching fire down in the little latitudes, according to MasterCard. The credit card behemoth interviewed more than 35,000 people around the world across 18 markets as part of its new payments index survey. 93% of the survey respondents said they would consider using at least one emerging payment method. Specifically, within Latin America region, 83% of the people said they would consider using at least one emerging payment method, such as cryptocurrency, biometrics, contactless payments, or QR codes. Blaming the pandemic for this fascination with a new currency, MasterCard says nearly 3/4 of Latin American respondents agreed that they have tried a new payment method they would not have normally tried under usual circumstances. Compare that to the 63% who responded that way globally. They say the pandemic has galvanized people to try flexible new payment options to get what they want when they want it. The survey, conducted between March and April of this past year, comes on the heels of El Salvador's decision to be the first in the world to approve a cryptocurrency, in this case, Bitcoin, as its official legal tender. But the country has lost almost $40 million over the last year with cryptocurrency since 2021 when it was adopted. But despite the crypto clouds in El Salvador, the survey further found that 54% of Latino and Caribbean consumers are optimistic about the performance of digital assets as an investment, while 82% also replied that they wanted their current banks to provide them with a range of directly available cryptocurrency-related functions. Education is key, even where the tropical winds blow sweetest, because 77% of those questions said they would use crypto more if they understood more about it. And in a win for credit cards and a thumb in the eye for those cash versus credit prices at gas stations, more than half of the consumers in Latin America said they would avoid businesses that do not accept electronic payments of any kind. And I happen to agree with them 110%. The survey's findings come at a time when its arch nemesis Visa is rolling out crypto cards in Brazil and Argentina this month in partnerships with major local blockchain industry players. And speaking of Argentina, experts say the appeal of cryptocurrency in the land that gave us the tango has largely been due to the instability of the peso, which is experiencing massive inflation of over 55%. Originally reliant on dollars or euros, the crypto craze reached 103 billion in 2021 in Argentina. The number of companies paying their employees partly in crypto increased 340% over the last year, giving Argentina the highest percentage of crypto paid employees in the entire world. And largest economy, Brazil. It is also the largest crypto market, valued at $27.6 billion a year as of April 2022. Latin America's first cryptocurrency, Mercado Bitcoin, valued at $2 billion last year, is based in Brazil. And according to the 2022 Global State of Crypto report, Brazil has the highest percentage of its population owning crypto in Latin America. And 100,000 of Cuba's 11 million citizens use some form of cryptocurrency. That may not sound like a high number to you, but for a country that only recently introduced the internet, it's a rapid development. Crypto usage on the island is up in large part related to the U.S. embargo on the Cuban economy, blocking its citizenry out of the Western world's financial systems. In November 2020, then U.S. President Donald Trump banned the use of Western Union, the main company that was facilitating remittances to Cuba at the time. This accelerated the use of sites like BitRemisas to send money to the island. In April, Cuba's central bank approved licensing of certain cryptocurrency service providers after allowing crypto for personal use since 2021. Given cryptocurrency's anonymous nature and its independence from national and multinational oversight, this allows circumvention of U.S. restrictions. Venezuelans and Nicaraguans have likewise enlisted cryptocurrency to get around U.S. sanctions. And in Panama, we are seeing the most extensive legislation to expand crypto. A bill recently passed in the Panamanian Congress regulating 8 cryptocurrencies: Algorand, Bitcoin, Elron, Ethereum, IOTA, Litecoin, XDC Network, and XRP Stellar. So Panamanians are now able to use any of these currencies in private businesses and for civil matters, such as paying taxes. The bill passed the legislature with 38 votes in favor and 2 abstentions. Many worry crypto could be used for money laundering in the troubled nation. Continuing problem for Panama, but Panamanian lawmakers have assured us that crypto will be regulated and overseen by a watchdog, and that the transactions will be subject to the country's existing laws on financial transparency. Tax experts, though, have expressed concerns, saying the proposed protections are really not rigorous enough to prevent fraud.
What you gonna do? What you gonna do when they come for you? Bad boys, bad boys. What you gonna do? What you gonna do when they come for you? Bad boys, bad boys. What you gonna do? What you gonna do when they come for you? Bad boys, bad boys.
In our next story, if you're eyeing a run at crypto, and since you're listening to this show, I can only guess you are, you may be wondering if it's safe. After all, look at any news site or simply Google crypto, and a dozen or so more stories pop up about scams, money laundering, criminally attached wallets, and the like. But as the BBC reported last winter, while billions of dollars worth of cryptocurrency move from illicit addresses every year, most of it ends up at a surprisingly small group of services, many of which appear purpose-built for money laundering. However, even if there are only a few bad actors out there, these illegal activities are related to the drug trade, terrorists, human trafficking, and some of the nastiest realms of the dark web. You would be wise to follow a few good tips before wandering down the garden path into the cryptoverse, and there are even some tools and services that can keep your investments on the straight and narrow. Don't shoot the messenger here, but many of the strategies to avoid nefarious behaviors in the crypto land are common sense. Protect your wallet and your passwords with extreme prejudice. Don't give out personal info to any untrusted sources, and stay in the territory you understand. The best way to lose your shirt is to start trading above your head. But how do you know if an address is suspect or an offer is probably a 10 on the BS scale? Well, there are a couple of ways you can tell. Guarantees on returns is one of the biggest stop signs. Nothing about crypto or investing is guaranteed, and anyone that tells you differently has a bridge to sell you in Brooklyn. Cold calls, overly aggressive marketing, and of course, the lack of ability to substantiate their validity are all caution signs. Anyone that latches on to you online and wants to warm your way into your heart is either a really good Tinder date or a scammer up to no good. And either way, you're better off staying closer to church-oriented social activities. Thank you, Frank Zappa. But I did mention a few services that might be of assistance in helping your inner Pinocchio to learn right from wrong while venturing into crypto while you're getting your sea legs. I got a message this week from one such company. I'm not going to name drop any of the vast array of service providers out there until one of them decides to sponsor this podcast. But Andrew, the Ukrainian from amlbot.com, asked me to look at their service this week, and he asked me so nicely that I had to take a look. AMLBot is an internationally based screening service that for a pretty hefty subscription fee, they will scan and research every crypto address you need to look at for connections to illicit activities. The thinking behind that is if you're receiving transactions from criminal enterprises, you can be held complicit in money laundering from some human trafficker or drug dealer you've never even met and may not even know it. By scanning every address you interact with in crypto, you can help root out bad actors and protect yourself from the wolves in sheep's clothing. They scan the addresses, compare it with an algorithm against an international database of dirtbags, and create a report to let you know the likely address is connected to one of those said dirtbags. Starter plans run you about $100, and that gets you 100 searches, all the way to $1,200, which will get you 2,000 searches. But if you're wheeling and dealing in the cryptoverse with actors from Manchester to Mumbai, you're bound to run across a few dodgy players. It's a good peace of mind to be able to check your work with the experts who know. Big thanks goes out to Andrew at AMLBot for the heads up he gave me. And if you have a great tip on ways we can all play along nicer while we slay the dragons of the alt world, I'm at info@thechartedlife.net or That Sailing Guy on Facebook, Twitter, and LinkedIn. Drop me a line. I'd love to hear it, and I'd love to share the information. And for our final story, a little note from me. With the bear market crashing around our ears and government regulators clamoring about new regulations to hedge against another Terra collapse, many investors and financial advisors are shying away from crypto. Google reported an all-time high in searches for the term Bitcoin is dead, and crypto pundits are all examining the future of crypto with a jaundiced eye. But just 6 short months ago, Matt Damon was shilling for Crypto.com during the Super Bowl for a couple of $1 million per minute, and everyone thought, as the immortal Tom Penny once wrote, the sky was the limit. Bitcoin, Tether, Solana, and Cardano are all up on average of 15% on the week, along with a positive uptick for most of the other Big 10 coins. The market cap or total market value of crypto is also up on the week, although it is down for the year from a $2 trillion high to just below $1 trillion at just around $950 billion. What this does mean is, well, the idea that you'll be a millionaire by dinner time with a decent investment in Bitcoin seems to have gone the way of the dodo. Crypto is a volatile market, and folks who banked heavily on meteoric rise in coin prices in the crypto market are now trading in cans for 5-cent deposits at the supermarket. But many experts say crypto isn't about and should never have been about speculation. Rather, it was always supposed to be an alternative currency for commerce. And it's the nature of that use that means whether it's up or down, a small investor can still make money trading in crypto because while it is down, it is not out. As you know by now, the purpose of this podcast is not to make you into sharks, but rather to allow you to go swimming without worrying that you're going to lose a leg. Just as many experts say that crypto is here to stay as say it's a risk. You can analyze the options market and read all the op-eds telling you one thing or another, and all of them will be right at least once in a day. When it comes to crypto, it's like fortune telling. You keep your reading wide enough, and you're bound to hit a woman whose name begins with S at some point. The key is to try it out. I will help in any way I can, but start small and set yourself up a wallet. It's free, and that's how I got in, a small investment in Litecoin, and I was off. The problem with this economy, and especially crypto, is that confidence is down. That's what caused crypto to spike, and it's what's causing it to lag right now. Lack of confidence. If we teach America how to use crypto responsibly and ease them into a sober, responsible, well-heeled market with the tools to succeed and the knowledge to use them. We can grow this economy. We can grow crypto, and we can grow our portfolios. So that's it for this episode of the Crypto Nightly News. I do hope you have learned a thing or two and that you'll put a few bucks into crypto and see where it goes. If you need any help, I'm always happy to get a message on WhatsApp, Facebook Messenger, email, or even smoke signals. Check out my website for my other podcast and my books and all my other great ideas at thatsailingguy.com. And be sure to follow me at I'm That Sailing Guy on Facebook, LinkedIn, and Twitter. We'll be doing this every Monday at 9 p.m. Eastern. And maybe I'll even schedule a few live chats so we can all get to know each other in the meantime. But remember, we need a sponsor. If you saw this and you're looking for a way to get your brand out there, well, you saw this. And so will everyone else. So get on board and help us keep the gas in our tank. If you're not into sponsoring, I also have a Patreon account at That Sailing Guy. Buy me a beer and I'll get you all kinds of exclusive and advanced screenings of my work. For the Crypto Nightly News, I'm Chris German. Trade safely, my friends. We'll see you next time. Thanks.